In this video, I'm going to share with you the top altcoin to watch in July that you simply can't afford to overlook. Is that a big enough cliffhanger for you? Let's jump in. So what's this altcoin I'm hyping up so much? It's Ethereum, Bitcoin's neighbor. The buzz? A potential Ethereum ETF approval that could send shockwaves through the market. While ETFs are no longer a novelty after Bitcoin's ETF approval in January, they most certainly still have a jarring impact on price movement. We saw this with Bitcoin's ETF quickly making history by becoming the highest volume traded ETF in history in just 5 short months. So with that said, stick around as we break down the thrilling potential of Ethereum's ETF and what it could mean for your portfolio. Now let's set the stage. Rob Nelson recently hosted a riveting roundtable with financial titans John Najarian and Alex Mascioli, in which they dissected the potential impacts of Ethereum ETFs on the market. Najarian drew parallels to Bitcoin's ETF launch, recalling how Bitcoin prices surged post-approval. He's banking on Ethereum to mirror this, especially as global markets like Hong Kong have already embraced Ethereum's ETFs. He pointed out the growing obsolescence of opposition from figures like SEC Chairman Gary Gensler as global acceptance increases, saying that the world won't wait for us, hinting that US markets need to catch up. Mascioli weighed in with his financial foresight, revealing that, similar to Bitcoin's ETF anticipation, there's a whirlwind of over-the-counter Ethereum trades happening right now. Billions are at stake, priming the market for a major ETF launch. But there's more to the story than just anticipation. Current market movements are giving us subtle hints. Large asset managers withdrawing their holdings are often misinterpreted as sell-offs. Instead, they could be strategic repositions in anticipation of the ETF approval in which they re-enter their positions. And amidst regulatory uncertainties, Gensler's recent comments suggest a smoother path ahead for Ethereum's ETF applications. While no dates are confirmed, the progress is palpable. And one management firm may have just accidentally revealed the exact day the Ethereum ETF is coming. The stakes are monumental, Bitwise CIO Matt Hogan stated, projecting a staggering $15 billion could flow into Ethereum's ETFs in the first 18 months alone. On the competitive front, firms like Van Eck are not just participating, they're planning to dominate by undercutting fees. Their strategy? Lose money initially, but make it back through massive trading volumes, especially in decentralized finance sectors. This aggressive fee slashing could radically increase ETF accessibility, inviting a flood of new investors and potentially accelerating Ethereum's adoption and price surge. So you might be thinking, this is great and all, but how much time do I have to position myself accordingly? Remember what I said earlier about a management firm potentially revealing the launch date? Well, we have Van Eck to thank. Their recent regulatory filing for an Ethereum trust has the market buzzing. The filing, an 8A form, was submitted just this Tuesday, which historically precedes an ETF launch by about a week. This timeline aligns closely with Van Eck's Bitcoin ETF launch strategy, where they filed exactly 7 days prior. Following this pattern, July 2nd could be the big day if history repeats itself. Furthermore, another clear indicator for Ethereum's ETF acceptance is in the current marketing landscape. Bitwise and other sponsors are ramping up their marketing efforts, and Van Eck's bold price projection sees ETH hitting 22,000 by 2030. While nothing is guaranteed, the coming weeks could redefine Ethereum's role in the crypto market in a big way, and not only elevate the price of ETH, but also the entire industry as we continue to move towards mainstream adoption. And if you're wondering what this means for Bitcoin, watch this video where Ryan discusses Bitcoin's rise to fame as the most popular ETF of all time in just 5 short months.